Hey guys, welcome back to the channel. It's basically 10 a.m. last day of May 2020. Interesting weekend. It looks like a lot of the frustrations that we see because of this recent police incident were kind of some frustration already starting to build over, obviously over years and years of seeing the same bull crap. But I think it also demonstrates some frustration with certain socioeconomic levels of what this virus has done too, and cause a bigger divide, like we've talked about, between the different classes and different levels of wealth and the economy, between lower and upper class, and then I think there's a segment of the middle class population that, after this virus came out and started to really wreak havoc on the economy, that certain area of level of economic status is going to either go up or down. I think the middle class is going to start to narrow, where it's sink or swim, basically, taking advantage of opportunities in this type of a crazy market with volatility on all levels, meaning businesses are distressed and things like that. I think the middle class will either seek opportunity, or certain people it will hurt and drive them into the lower class, creating a bigger divide between the classes, numerically as well. Like I said, basically you're going to have less and less of the middle class. But it's also an interesting concept too to think about it, that a lot of things are running into this week in the stock market as being significantly important. We're starting to come into the beginning of what will unfold as the next quarter's earnings, and we literally just hit two very important inflection points in the broader averages. So not just the 500 stocks that we see in the SPLY that are basically driven by 20 stocks, but the New York Stock Exchange. We talked about the McClellan Oscillator, which is closer to 3,000 stocks, and we just hit another peak, and we've seen this happen 3 times now, where we've peaked on the oscillator, yet we've made higher highs on the S&P 500. It is a little concerning, but it's a double-edged sword here, because we've seen this in the past, and I'll show you some graphs to show that. But these are sharp moves. We've had more of rounding moves in prior sell-offs. I would say that this week coming up is crucial in more ways than one. If there's a belief the market is being manipulated and supported by this administration on some level, whether it be political or just the way the market has always been kind of held up and backed by the Fed and done what we call whistling through the graveyard, where we really haven't had periods of depressionary or recessionary implications on the market, where you've kind of had those flat areas of non-growth, but the market's been able to support itself by stock buybacks, by this ecosystem of millions and millions of traders that have created this own almost digital breathing entity of the stock market. It's very different than 1929. 1929, you had very few companies in the market, and there wasn't a lot of speculative trading. The trading was obviously not the type of real-time data that we get now. There wasn't a lot of traders. There was traders, but they weren't buying big blocks in and out, huge swings in stocks. There was more of a perception of a public company, because these are factories that you worked at or walked by or saw. You invested in Coca-Cola, things that you knew, Procter and Gamble. These different things that we could see and feel and touch, and you actually got a stock certificate for your part ownership in the company, and it was important to know what the company owned and what kind of earnings they had and what drove that company, and you'd read the newspaper, and that's how you collected your information and then made your decisions on your investing at a much slower pace. Now we have thousands and thousands of companies that are zombie companies, not even making money. You have millions and millions of traders, and it's getting the numbers are getting exponentially higher, and they're moving stocks based on technicals and perception and day trading and hype, and it's almost like this giant digital casino of perception. We're seeing stocks move what would equate to billions of dollars of market cap intraday over nothing, you know. For example, Tesla will probably move Monday morning based on the SpaceX successes that they had over the weekend, which I thought was pretty cool. But these are the kind of things that are going to move the market dramatically, and there's really no fundamental backing to a lot of the moves that we see, whether it's stocks moving from $3 to $20 and back down to $3. You never saw moves like that in 1929. So these are completely different markets. If the political backdrop here has been supportive of this type of market, and that comes into a little bit of strain here, moving into the November period, we could see some volatility for sure in the market, since we're not really moving on earnings right now. And fundamentals, it's a lot of technicals and psychology that we don't want that psychology to change. If it does change and there is a perception of weakness on that front, we could see some sharp pullbacks in the market. But we're right on the edge of what could confirm a, believe it or not, a bigger move to the upside, which would get us at least to 310 and change on SPY. So I mentioned if I go back historically and look at these V type of markets that we've seen, and if we scroll back in time and look to, I think it was January of last year, we can see the same type of V sell-off that we have. And there's a couple of things of interest when we look at it here. We see more of a rounding in the McClellan Oscillator, but we do see the same type of peaks. The bigger difference is that even as we saw weakness from January to March, respectively, March 7th was the low point of the McClellan Oscillator. We did see a continuation move from January to March 7th in the market from 250s to 270 on SPY. So the market can move higher against that. And what happens is usually the small group of stocks that powers the S&P 500 is kind of leading the way. And then the broader averages start to catch up. In fact, we continue to make lower lows on the McClellan Oscillator until somewhere around June, where we made a higher peak substantially, and then we were off to the races on the upside. And what you did see preceding that peak was a move in the shorter-term 20-day moving average above the 200 exponential back in February, and that really marked the low past the V point of what we would see moving forward, since we came just shy of that. And we continue this onward trek where the 20 crossed above both the 50 and the 200 and never really crossed back below the 200. We can scroll all the way across. And now what we're seeing here in real time, if we go to present day, is that we have that same cross on the 20 above the 50. Now granted, I'm using a 45, but they're very close. And we are very close to crossing a 20 above the 200-day moving average. So with respect to the weekly numbers, the McClellan Oscillator still looks somewhat healthy. Daily, we saw a peak recently, and maybe that's what preceded this sharp pullback that we got. But you could actually start to get a sideways move or a break above this trend line, which would cause more than likely a significant move to the upside. Also, you see some relative strength in the RSI starting to channel as well, where we had some weakness and then we kind of bounced in this range here. And we started to make some lower lows in accordance with the McClellan Oscillator, but now the relative strength on the S&P 500 is actually picking up to the upside, while the McClellan Oscillator has kind of found a neutral area on the top part of the zone. So what does all this mean? It means that the market either pulls back sharply on Monday and Tuesday, or we're probably going to head to that 310 level minimum on S&P 500. And you're going to get confirmation too with this short-term, long-term crossover, which at this point is hard to believe. But if we can absorb all this political, this tension that we're seeing across the nation, this bigger divide, you might have a bolder stance in the market, which is even more bullish than what we're currently seeing, which is quite hard to believe. But it could set up for another big move to the upside before coming into some really vulnerable technical points closer to the election time. And what I mean is that what could happen is you could have a move from this 300 area that we're talking about in the S&P 500 sharply up to 310, even 315, getting close to the 320 area, which would leave a very vulnerable market coming into the election time. And then a pullback that would be significant would probably bring you back to the 300, because the 300 seems like an area of extension of wave 5 that we've seen from the bottom. And it almost seems like an extension that's more of a FOMO, YOLO, just a little bit of a blow off, not based on any fundamental support. And usually those get retraced in some type of pullback. Doesn't mean in the context of a bull market that we can't retrace back there to the 300 and then continue to bounce and then go back higher again. It just means that's probably going to be a sharp retracement area. But so far everything looks very bullish. I know it doesn't have the support of the economics that we're looking at, but we see it in the McClellan Oscillator on the weekly, and we can show that as well in the time frame here. Let's change that to weekly, and we'll see that even though we are channeling on the daily, that the weekly, and these are going to be skewed because of the lines I drew, so bear with me, that the weekly is looking okay. It has its little peak here too as well, but it's kind of come across its peak. Let's see if we can zoom in a little bit here and I'll show you. But this week is going to be huge. And I know we said that a lot, but this one's pivotal. We have crossed above like a little bit of a weekly channel area, but we kind of back tested it slightly here. So it should be an interesting week here. If we can push higher on the weekly, we still got a lot of wiggle room to where we've been before. And if you start to get the broader averages working in tandem with the S&P 500, watch out. The market could really get going to the upside. You also have a weekly MACD crossover, which is positive. And then obviously the RSI has plenty of wiggle room on the weekly. If we remove some of these things right here, you will see what I'm talking about. And right in here, you can see that we have plenty of wiggle room to the upside on the RSI for the weekly. And these are probably drawn from something else. They carry over on Thinkorswim. So that's that for now. Crucial week here. If we can absorb some of this information that we're getting, these riots or something else, and like I said, it could have some concerns politically, and that may affect the market at this point. I don't think the market really cared at first, but now things are kind of starting to escalate a little bit. And if the market is able to absorb that and not pull back, it'll happen Monday or Tuesday. It'll happen right away. If it doesn't, then the market could be very powerful moving into the next few weeks to the upside, believe it or not. I'll tell you a few stocks that look really bullish, interestingly enough here. Obviously the timing on Tesla is appropriate right now, and let's remove some of the studies in the bottom so we can kind of get a better idea of what we're looking at here. Let's get rid of the McClellan for one, and we'll show you what we're looking at. This chart on Tesla is actually looking rather interesting here, and let's zoom in a little bit and I'll show you what I'm talking about. So Tesla is continuing to channel between these two lines that I've drawn, and we continue to bounce off the lower line. The interesting thing here is that you're coming across a quadruple top here where we had some, and let me stretch this out and I'll pull it down again. A quadruple top here, we had some energy. This is a little bit of an outlier opening above the channel line, and the reason it's an outlier is because it preceded a sharp move to the downside. If it just kind of floundered and then hit the top of the channel and then moved back up, then we'd probably use a trend line across there that might be more appropriate. But since it didn't do that and it had a move to the downside and retested the 20, we're going to just call that an outlier here. We're looking for common touches along the top channel line. We're not looking for extensions or outliers that go way above that level. And now you can see how we've retested the lower channel line with a high volume, powerful move that engulfed the two prior candle days and gave us the highest close we've seen in the last 5 days. Although the wicks touched that level, we haven't had a close this high. In fact, we haven't had a close this high in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 trading days on Tesla with a close this high. So we are building some energy within this channel here on Tesla. From even a horizontal perspective, you can see we're kind of gradually turning up. If you want to kind of look at it like that, I know it's just kind of a haphazard little move here that we're seeing, but it was a retest of this inner channel, and then we've held this inner channel, right? 1, 2, 3, all these days have held this inner channel. We don't care about that. We care about the openings and closes of where we're at, more importantly, the closes. So we've kind of held that channel. Now we're pulling away, right, from this channel. We're not touching it anymore. 2 days of non-touch on this channel, regardless of the market pullbacks that we've seen, the wild moves in the market. We've made higher lows and pulling away from that intermediate channel. I would suspect that we're going to go tag 890 on Tesla from 840. That's a 50-point move. Another one that looks interesting here is Workday, W-O-R-K. Very interesting chart here. Breaking out, expanding volume, expansion on the MACD, into the red zone on the RSI, but it can hold that for a while. We've seen it before. And this has been a volatile stock, but an open above that trend line, right? Got rejection, pulled back, got a wick through the rejection, closed under it, hit, didn't even want to get up to it. Now you have a lot of static along it, got a wick through it, but now we have confirmation, 2 legs, 3 from the bottom with a long hanging man candle. Powerful move on WORK. That looks bullish, but it's volatile, so you could get little sharp pullbacks. ANET. Another one, this looks really bullish as well. ANET. Arista Networks. Powerful move from a longer term wedge. Crossover, the 20 on the 200 expo. Separation on the intermediate and shorter terms with a big volume break to the upside here. Bullish look. Minimum price target would be 237, 238. I know it's not a lot on a $200 stock, but if you start to break above 237 on a close, you're going to get all the way up into this area of static, which is like 245. Could be a strong move, or even higher. It's a powerful move because these were met with resistance at the 200x exponential moving average, correct? And now we're kind of breaking away with significance from the 200. It's the first time we really had this type of expansion away in a long time. Bullish chart. You can measure the gap here, and this gap is significant. So ANET looking strong as well, and then I'll finish up, and then we'll go into more detail this weekend on some other stuff if I can get out some videos. Snap looks interesting as well. Hard to believe, but another bullish move, volume confirmation, and you're getting close to a MACD cross from a level that's kind of interesting here. So you could get a little bit of wiggle room on Snap as well. Relative strength, relative to the relative strength. You got to move to the upside. Good confirmation on expansion and the volume, and then a clean break above the wedge. These are bullish looking charts. It's going to take a sharp market reversal to slow these down most likely. But these are sharp moves from the low end. So you could either get a continuation move right away if the market's flat or down on Monday with no move and confirmation on the SPY to the upside. You could pull back somewhat in here, but this wants to go higher. So we'll close it on that, guys. But this is a crucial week in the market. If you get that McClellan Oscillator to bounce back above that descending trend line and everything starts to move in tandem, we're going to be watching the financials. And we need to see, another thing is we've got to see the VIX, and we'll just use TVIX as an example. We have to see this VIX come down. We did see it come down late in the day, but on a trending average, we've got to see the VIX start to move. I'm not going to pull that chart up, but it's a little bit skewed right now, but we need to see the VIX pull back, and I can go into detail on that later, but we're still holding this 10-day channel low on the VIX around 133, 134. It would be nice to see the VIX get a close below like 138 to get some confirmation on this move to the upside in the market.